welcome to another show. We were hoping to not have to keep talking about this virus situation, but it's doesn't seem to be going away anytime soon. So we felt it was important to keep discussing it, and we actually had a bit of feedback asking us to keep talking about these things. Makes sense. Things are changing day to day. Our businesses are changing day to day. So, we're finding a lot of misinformation out there, and I know a lot of people are confused. A lot of people haven't sent in their applications for some of these SBA programs yet. Might be caused by a little bit of intimidation, just the paperwork they asked for. Not everybody's got that squeaky clean set of books they can access quickly to fill out these loan applications. So we're going to continue to try and clear this up and make sure you get the correct information and just the information you need, not all the mumbo jumbo that keeps getting floated around. I mean, doesn't seem like I could see a Facebook post with a legitimate question about these programs, and then it's quickly followed by, well, I heard this, well, my friend told me that, and blah, blah, blah. We need to stop doing that and go to the SBA's site, go to your bank, and deal with facts, not all these rumors and doom and gloom situations people keep trying to report. And you'll turn around and ask them what was the problem with the loan or the application, then they never respond again. So I know it's shocking, but I don't think a lot of the information we're getting on Facebook is worth a damn.
Yeah, we're gonna have a guest on here, a legal expert from a place that we all know. We'll leave a little suspense there and let you figure it out here in a minute. But it really has nothing to do with that company. It's somebody that offered to come on that knows the two different SBA programs inside and out. The problem is these things have changed ever since they announced they were going to do these programs. They've changed a bunch: interest rates, terms, deferments, what it could be used for. All the stuff has changed a lot. So it's all officially final now. So there's all kinds of documents that are out there that have been floating around Facebook and other places that people have published. But like I just said, some of those have changed. So you might be looking at stuff that's not accurate at this moment. So we'll clear that up. We'll clear, what each program does, what it can be used for, what the terms are, how much you're eligible for, who's eligible, all that kind of stuff. Because, like you just said, Jeff, we don't want to talk about this stuff anymore. It's everything you see online. It's everything you see on TV. It's all that people are talking about right now because, unfortunately, it's a huge deal. I don't care if you believe in it, think it's overhyped or whatever. This is what we're living in, and the impacts to our business are real. If you have not been impacted by this, you're a liar. It's affected every company in every industry, not just towing, every sector of every business. There's very few that's affected positively, if any. 90% of us have been impacted negatively, and to a large degree. It's not just a slight downtick in business. This thing has been huge for everybody. So we'll talk about that. We'll talk about kind of within your own organization, what you should be doing. We've been in this now for a couple weeks, 3 weeks, whatever it is. It's kind of become the new norm. We have new operating procedures in place. We can discuss a little bit. We're not lawyers, but we can talk a little bit about what we think our liability is to our employees, how we think we should be taking care of them. And like I said, just clear up, all the good information versus the bad information.
And, if you've got friends, small business owners outside of our profession, outside of towing, please do them a favor as well as us, the podcast, and point them in the direction of our YouTube channel and the podcast for these episodes that we're doing that are virus related and SBA program related, because the stuff we're talking about applies to just about any small business in the country here. So, spread the word. We would appreciate it. I'm sure they would appreciate it. I actually had a company near us. They're electricians. It's an electrical company, and they're having trouble finding information within their industry. And so we point them in the direction of all our stuff. I provided them with some paperwork I printed out, a really good summary that was sent to me on these programs. So, man, help everybody out you can, and spread the word. Get this info out there, because I think it's really good. I think towing between the podcast and tow times and our state associations, our national association, I think we're doing a pretty good job of, for once, kind of like coming together, sticking together, and trying to share the proper information. And so I'm pretty happy with that. Everybody's just trying to do the best they can right now in a very strange time, and help each other out. It's the best we can do right now.
Yeah, even at the federal level, TRAA, has been hard at work. They got us specifically listed on the critical essential infrastructure list. So that cleared up any confusion, hopefully, and gave everybody the documentation they needed to continue to operate if there was any questions. But the bad thing about this whole thing, this whole pandemic or whatever they're calling it, it didn't happen fast, but it did. It was around. We heard about it. We read about it overseas. But then all of a sudden, almost overnight, our business fell flat on its face. I guess I speak for myself, but I think everybody else is kind of in the same boat. It just almost overnight. Everything shut down, businesses, schools. There was nobody on the road. Different segments of the business have been impacted differently. Heavy duty, not so much as light duty. Certain customers versus motor clubs, or your cash calls are obviously down. But it came out of nowhere. So when they started talking about these SBA programs, everybody, rightly so, kind of panicked, like, shit, yeah, I need that. And so all this information started floating around. Everybody started talking, and as Facebook tends to do, bad information started swirling, and everybody got their hands on it. But I think what I've really learned, the importance of, throughout this whole thing, well, I've learned a lot, obviously. I think we all have. But one thing I have really, really appreciated is how good of a relationship we have with our bank. We were fortunate. Our day-to-day business bank is an SBA lender, so we were able to apply directly through them with the same people we deal with every day, people that know our business, know almost too much about our business. But we were able to communicate with a real person that knows us, that's here locally, and they gave us a heads up on what they need. They kept us updated through every step of the process. I just talked to them this morning about where we're at. It looks like they have everything they need. It's in underwriting. We might have, money in as soon as Monday or Tuesday for the PPP program. So that's pretty cool, and not having to just be a number on a list somewhere of some bank that I have no relationship with has been big.
All right. Well, we're going to take a quick break, and we'll be right back with our guest. As we mentioned earlier, we've got a guest here who is going to be able to provide us some pretty solid information in regard to the SBA programs and the assistance that's out there for towers right now, and most small businesses. So I'm going to let Peter introduce himself.
Thank you, Jeff. Thank you. My name is Peter Necklace, and I'm the general counsel for Agero. We're a motor club and working with a number of service providers throughout the U.S. We also have a division that works with companies that are in the repossession space, and I know that they're struggling as well. So we've been doing a couple of webinars and getting some data out to participants in our networks to help them through some of the SBA programs. And as I was discussing with Jeff earlier, we spent a fair amount of time talking with our outside legal firms, going online, looking at the materials, helping some affiliated companies with the application process. So we've been going through some of the hoops that I know folks on this phone call or on this session have also been going through. It's a complexity, and we'll try to make it a little easier for folks to understand, hopefully.
That is great. Do you want to start out? A lot of people, we did, when these programs first started coming available, we did do a show based on what we knew at that point. But in the past week and a half, it seems like everything has changed that could possibly change. And along with that comes all the misinformation and the people that haven't been updated with the info. So would you care to kind of, just so everybody that may be listening to this information for the first time, just give a quick rundown of the programs we're going to discuss?
Yeah, happy to. So as part of the CARES Act, which the president signed into law, I believe on March 27th, they had two programs that they put in place through the Small Business Administration, the SBA. The two programs that were directed to get money out fast, to get it out with as least painful application process as possible, and to open up the options or the opportunity for small businesses to continue to run their companies during this stressful period. And the goal, the federal government's goal in doing this, that the way they described it is, how do you get these funds out? How do you help companies stay in place, retain their employees, and weather the storm, which the hope, I believe, the federal government has is that it's going to be 2 months or so, because many of these programs have features that are really short-term assistance over some discrete period, shortened period. And the two programs that the CARES Act did that's specific for small businesses were, the first one was the Paycheck Protection Act's program, Paycheck Protection Program, that's referred to as the PPP, 3 Ps. And the other one was the Economic Injury Disaster Loan Program, EIDL. And both of those programs, existing programs that the SBA was running, and the new changes to them simplify them, make it easier for people to access it, and theoretically make it faster for folks to access it. So when we go into the detail in this conversation, Jeff, what I'm going to lay out is to say, hey, these are the changes. This is how the government intended these programs to work, and this is what we're hearing right now. So, Jeff, would you like me to jump into that, or did you have questions just on the high level?
Brad, you got anything before we get into it?
No, I'd say let's go ahead and do them individually.
Okay.
So if you want to start with the one that's getting the most attention for obvious reasons that we'll get into, but once you give a deep dive into the PPP, the Paycheck Protection Program.
Yep. So the government appropriated about $350 billion for this program. So it's a heavy, lot of money behind it. The floodgates have opened up. So last Friday was the first day that applications could be put in for companies and sole proprietors. And this Friday, today, is the first day that applications can go in for independent contractors. And that's an important distinction, and I'll get into more detail. There's been a lot of confusion on a business, an LLC, an S Corp, a C Corp, regular companies, sole proprietor running without having incorporated, or some independent contractor. And that we'll get through the details on that and really try to clean that up or help folks understand the distinction. The PPP, the Paycheck Protection Program, it's simplifying the 7A program that currently exists under the SBA. It allows your local lender. So the difference between these two programs is under the EIDL, you apply directly to the SBA. You go on the SBA's website, you apply directly, you fill out all the information, and the SBA manages it behind the scenes without a lender, without you having to find somebody. On the PPP, one of the issues that you have to worry about or work through is you have to find somebody, a lender in your community who's already in this program, who's already signed up for this program, and who has the bandwidth to help you out. And that's one of the problems that we're seeing our affiliated companies, our suppliers struggle with, is finding somebody who they can go to. So the best advice I have for all the folks listening to this who are interested in this program, if you have an existing relationship with a lender, reach out to that lender and ask them if they're participating in the PPP and if they can help you access this program. This program has a lot of great features to it, but the first barrier that you're going to have, that any company is going to have, is you need to have a lender who has the bandwidth and the ability to help. So for example, Wells Fargo opened its window up and started working with potential borrowers last Saturday. And they said on Sunday they had run out of bandwidth. They had run out of capacity because they had already committed $10 billion. Now the federal government, the Federal Reserve, on Monday came out with an announcement saying, don't worry, banks, we'll buy those securities from you so you'll get more monies available on your balance sheet so you can start lending again. The Federal Reserve came out and said that on Monday. I don't know if that's actually happened yet. I haven't seen details where they've been able to open the spigots up again for these banks to again lend. But you're going to have an issue on just human capacity at your lender and also how much they have available to lend in this way based on what their balance sheets look like. So there's two limitations there, and they are overwhelmed, as I understand. They're getting a lot of interest from different parties. So again, the first recommendation I have is if you have an existing relationship with a lender, reach out to that lender. If you don't have an existing relationship, there's a line, a website on the Small Business Administration on SBA.gov that you can go to that you can identify lenders in your community who are participating in this program, and definitely reach out to them. The federal government is encouraging, in part of its directions to lenders, is it's encouraging the smaller companies who are trying to borrow the smaller dollar amounts to give them priority, to get their dollar amounts out first into the market, because the federal government, the Treasury Department, others recognize these are the companies that are trying to preserve their employment base, their employees in place. And so the emphasis is how do you help those groups first? Brad, any follow-up questions on that, or just keep moving? Jeff?
No, the only comment I have is, yeah, we talked about it earlier. The fortunate part for us in particular is that our everyday bank that we deal with is an SBA lender, so that process has been fairly easy because we have that relationship and one-on-one communication with our business banker that was helping us all along the way with the application. One question I have, which I don't see why they couldn't, but would you encourage people to apply at multiple banks if they don't have a direct relationship with one?
So the rule is you can only put in one application. It's actually one loan, one PPP per company. So you can't apply, get the loan, and then separately apply. I think there's a level of complexity that I think would potentially tie up a borrower, would tie somebody up if the SBA was seeing multiple applications come in for the same borrower. And one of the things that I worry about with any of these programs is the unintended consequence. You have a wonderful program with wonderful intent put out, and you apply for it with all right intention, and you don't follow the rules carefully because it's confusing, and you do something inadvertently. You don't want to be blocked from further benefits down the road. My expectation is, the Secretary of Treasury just came out maybe about 3 days ago saying that they wanted to re-up another $250 billion for this program, for the PPP. And they're going back and forth. I think there's some discussions on the Hill right now where there's disputes between the Senate Dems and the Senate Republicans on what that next benefit or product program should look like. But they're going to put more money. My expectation is they're going to put more money into these programs to continue to push revenue in this way. And I honestly believe that they'll continue, the federal government is going to continue to try to figure out how to get programs out. You do not want to be barred from the benefits that you're going to be able to access down the road. So it's really important when you're completing these applications or submitting these applications that you do in a very careful way. And so, Brad, what I would say is I would not want to encourage somebody to send multiple applications in case is viewed as somebody acting inappropriately and blocking them from further programs down the road.
No, that's good, because I've seen a lot of talk, specifically on Facebook, people saying, I'm going to apply to every bank to up my chances of getting it. So I think that's probably some good advice. Outside of that, why don't we just get into who qualifies, how much, what it can be used for, and some of the finer details of the PPP.
I've got one quick question on that. Are the banks, seeing that they're doing this through the SBA, are the banks allowed to prioritize their existing customers? Are they allowed to say, no, you don't bank with us, we're not going to take your application?
Human nature is what it is. My expectation is the banks are doing that, whether or not they're permitted to do it. So one of the companies I was helping out is a nonprofit, and nonprofits are also eligible for this program. And that nonprofit had a relationship that somebody knew somebody, et cetera, and they were helped on the first day of the application. They were actually very helpful coming up into that period. I was on the phone with them, with a couple of different folks, and we were trying to figure out how do we get that nonprofit to not go out of business and really stay and be able to retain its employees. And there was a lot of help provided by the bank in doing that. And there's just, it's human nature, it's bandwidth for these lenders, it's, you know, going that extra mile to make sure somebody is doing it in the right way and saying, hey, you have to make sure you're doing X, Y, Z. I just think that if you have a relationship with a lender, absolutely lean on that lender. That's going to help you. If you don't have a relationship with any lender, don't stop yourself from trying really hard and being the squeaky wheel. This is not the time to hold back. This is the time when we're struggling, every business in America is struggling. This is the time to be that squeaky wheel and be out there being polite, because these bankers are overwhelmed and these folks in Washington are overwhelmed with it, but making sure that your voice is heard and your application is in, and you're pushing to help your company out and weather this storm, which we all hope is going to be a relatively short storm. Okay.
Yeah, I think that's good information. And we talked earlier, that's been one bright spot of this whole thing, is the relationship that we have directly with our bank and how that's kind of streamlined everything. We hope. We're still waiting on a decision and all that, but
I want to hit a couple of takeaways that I want to make sure people are understanding about these benefits. Typically, the SBA requires you to show that you've tried to find some financing elsewhere, that they're a lender of last resort. On these programs, they're not going to require that. They're not going to make you evidence that you could not get your funds from another place. Typically, the SBA requires you to have a personal guarantee. It is not required under these programs. You will not be required to have a personal guarantee. Typically, the SBA, if they're putting a guarantee, they're going to say you have to have good credit. In this case, they're not going to. It's not focused on your credit scores. So folks out there who are worried about these programs saying, oh, my credit's bad, I don't have the collateral, I can't give a personal guarantee, these should not block folks from going and taking advantage of these programs. Expressly set in this structure was to say any company out there that needs these benefits should be able to get access to these benefits. Okay, so again, I don't want anyone stopping because they have bad credit scores, because they can't give a personal guarantee on it, et cetera. You won't have that in this case. Okay?
awesome.
Right.
Yeah, let's jump into who qualifies. I know it's a certain number of employees, yada, yada. and
Yep.
what it can be used for and what they might qualify for.
Absolutely. So on both of these programs, these are loan programs, and I'm always reluctant to saddle anyone with more debt. So these are loan programs. You're borrowing money. You're going to a lender, either the EIDL, you're borrowing from the federal government directly, or in these loan programs, the PPP, you're borrowing from your local lender or somebody who you have created a relationship with. So you're going to have debt on your balance sheet. You're going to have debt as a company. The nice part about both of these programs is that if you're able to follow the rules that they're setting out, much of that loan or some part of that loan is going to be forgiven and convert from being a loan to being a grant. And that's a good thing. The grant monies will not force you to pay it back. So the goal here, if you want these programs not as a cash flow, not as an expensive loan, if you want to avoid having to pay it back, you have to make sure that you're following the rules that they're setting out for the repayment. And so we'll talk a little about that also in terms of how you set yourself up for the greater likelihood that you're going to get this money as a grant rather than as a loan. But even as a loan, there's the deferred payment and there's a very low interest rate, and it's not an item that's guaranteed, and it's what's referred to as a non-recourse loan. Means it doesn't go past the corporate entity that's borrowing the money. So you have a company, it borrows the money, and the government can only look to that entity, or the lender can only look to that entity to get repaid. It's not going after your house or your personal assets behind the scenes. It's going after the entity that's there. It's non-recourse. The Paycheck Protection Program has a cap on how much you can borrow under this program, and it's based on a multiple of what your payroll costs were over the last period of time. And for most of us, what that period of time will be, what did it look like in 2019? What were your costs for your payroll during 2019? And you take that and you average it out. You take the whole year, you divide it by 12, and you take that number that you come up with and you multiply it by 2.5. So if I had on average $100,000 in payroll costs during 2019, I could borrow 2.5 times that. I could borrow $250,000 as my total loan amount that I can borrow under the PPP. Now, it doesn't sound like a lot of money, but if that's all going to be forgiven, that's going to cover you for some period of time. And what the federal government's trying to do with this program is give you a sufficient cash that you can cover 2.5 months of your payroll, assuming you kept all of your employees in place. So again, the goal is to say, the government is saying, the government's saying it wants to get funds out there to help businesses weather the storm for approximately 8 weeks. And that's why they're taking your average payroll that you had in the past, in some period in the past, and saying multiply that by 2.5, and that's how much you can borrow. And if you're using it for the permitted purposes, those funds, that borrowed money, will be waived and will not be required to be paid back. So that's on a very high level. There's a lot of details behind that, but at a high level, that's what they're trying to accomplish with it. What you can use the monies for, or you know what, actually, let me get into the loan itself. So you borrow this money from a local lender, you fill out the application. The application's 3 pages long. You can find it on the SBA's website. You can download it. It's not really tough to follow. If you go to the website that Agero has that's available to anyone, we have the links on where somebody can access these resources. Folks can follow through those links to pull down the applications, or folks can go directly on sba.gov and pull down the application. But the application is very straightforward. It talks about what type of company you are, and the top box talks about how you've calculated your payroll cost, and it talks about what the total amount that you're going to borrow, and you have to fill out the total number of employees that you have. Now, here's the tricky part. Many companies out there will be using 1099 contractors, essentially payroll, as part of their personnel. The government in this program doesn't include that cost as your personnel. You should only be listing out and calculating based on W-2 employees. So whether that's yourself, your spouse, your couple of friends, whoever, if they're getting W-2 wages, they're included in the calculation. If they're getting 1099 wages or compensation based on a 1099 contractor, they are authorized to apply for this program directly on their own, but you can't include them in your payroll calculation. And that's a complexity that the designers of this program didn't recognize, that many companies in the US use 1099 contractors as part of their overall structure. And that's a limitation, I think, of this program.
On the news this morning, they mentioned that there may be a new program that will include those starting Monday. They're expecting an announcement about adding contractors to it. You haven't heard that yet?
I have not seen that or heard that. And I was just on the Treasury's website last night preparing for this call today, seeing what the latest was from the Treasury Department on that. And Jeff, I haven't seen that at all.
Well,
You're ahead of me. You're ahead of me on that. Brad?
Yeah, real quick, on the payroll calculations, you do have to exclude any amount for any employee that exceeds $100,000 over the past 12-month period. So that's one thing you do need to do that might kick back and slow down the process for you. I know that's one thing we had to do. And so if you have any employees that make over 100 grand, whatever that excess is, if they make 120, then you have to take 120 off your monthly payroll costs. Just a little disclaimer there.
Yeah, let me go into a little more detail on how to calculate the payroll that you're looking at. For most companies that have been in business throughout 2019, you would take that average. There's some exceptions for business that are seasonal. There's some analysis for businesses that didn't work through the whole calendar year 2019. You can take the data that's provided from, if you're using a payroll company, they'll work with you. I understand that there's a number of payroll assistance companies that are doing this as part of their services now to small businesses. So they may have something. If you reach out to them, they may have the ability to just pull down that data for you on your behalf and run it for you. I've heard a couple of folks have been able to use that assistance to speed up their process. But it's not just the straight payroll that you're going to use. So you're going to use the state and local taxes, not federal taxes, but the state and local taxes that you're paying related to employment. You can take that and include it in your payroll calculation. You're going to take the calculations of any benefits that you're paying. So if you're paying health, if you're paying insurance premiums, if you're paying retirement programs, if you had somebody that you let go and you paid severance in 2019, you could include that in your calculations to pull together the total dollar amounts that are going to be calculated and average that. What's critical is that you're going to be able to provide evidence to your lender when they're doing the documentation with you. You need to provide them with evidence of how you calculated that. So to the extent that you have statements that you filed with state or local or federal authorities that evidence the payroll that you had in 2019, retain those, photocopy them, and include them in the material you're submitting to your lender. These are items that you would typically think, oh, well, why would I need that? They should just trust me. The lender is going to want to be able to see that, to confirm. They're going to trust your calculations because that's what they're directed by the SBA and the Treasury regulations, but they're still going to want to see that, and it's going to slow it down for you if you haven't collected that ahead of time and have it ready to prepare and produce. So it's, as Brad noted, if you have employees in 2019 that had salaries in excess of $100,000, you can still count them. You count them certainly as some of the employees you had. You still count them, but you only count their payroll up to 100,000. So let's say they made 120,000. You would include the 100,000 in that number that you're calculating to divide by 12 to get your average, but you wouldn't include that extra 20,000 that they made. Do not worry about the other benefits that that person made. So the healthcare benefits, any of the other benefits you're paying for that person making over 100,000, count them fully. But the amounts of their base salary or any other bonuses or tips or other compensation they received from you that exceeded 100, can't include that. Just deduct that. That has to come off your analysis to come up with your average. And you calculate, you add all these items together. My recommendation on your application, put together a chart that goes through and has month by month or fiscal quarter by fiscal quarter and saying, this was the wage, the W-2 wages we paid in each of those months. This is what it nets out to. I subtract on a line item any dollar amounts paid in excess of $100,000. I divide that by 12 and so on. So on one of the decks, on one of the presentations we will have on the Agero.com site, we'll have a walkthrough schedule that shows how people have filled this out. What's been great on a number of companies that we've been working with, they've sent in examples of what they've submitted. So we'll have those up as well so people can see, hey, what have my colleagues done to get their applications in? What are the learnings that they had? And can I follow it? Can I mimic it? One of the items that we saw that's not listed in the regulations in the application process is that the bank was looking for a board resolution by the board of directors of a company saying they're authorizing this application. That's nowhere in any of the application documentation. It's just something that we see that some banks are asking. We'll have a form that you can pull down if you want and mark it up for your own use that you can use to submit it. There's no magic to it. It's just trying to make it easier for folks as they go through this process.
Something odd we found, and we deal with Chase all last week. Chase kept telling us, don't bother as far as the PPP goes. Don't go to the SBA site. Don't fill out any of their paperwork. We're not going to accept it. We're only going to accept the app that we put out Friday, which ended up coming out Saturday. And then the first thing on that application was, hey, go fill out SBA form whatever first. For longer, it's not to waste our time doing that. So, it goes back to your relationship with the bank and making sure what they specifically want. I guess I imagine their requirements can differ a little bit, even though it's one program. I imagine bank to bank, you're going to find some differences.
Yeah, and we have multiple companies and they use different banks. So I've completed multiple applications through larger banks, and it's been different for each bank. So what you can expect might be just a little different on each bank you use, because everything was electronic on one of them. We fill out everything electronically. We signed it electronically, and we just had to upload some supporting documents. There was no filling out the SBA app per se. It was all just typing stuff in to a box, and it pre-populated everything for us. And at the end, we had to e-sign it. So it's really not bad, depending on the bank you use. I can't speak for every bank, but the process was not bad once they finally figured everything out and made it available. One of the larger banks we use was not available until I think Monday or Tuesday of this week. So they had some issues, but once it was ready, it was a fairly easy process.
That's great. Brad, have you heard back from the banks at this point, other than just to recognize that you've submitted the application?
I've heard back from one. They asked for a clarification on one thing. It was an underwriter, so that gives me some peace of mind knowing it is in the process and it is being reviewed at least. But no communication as far as an award or anything like that, or any kind of expectation.
So what they originally said was that their goal was, if you had it under $1 million, that they wanted to do it within 3 days. This was the Treasury Department's first interim rules that they put out. And if you go on the Treasury site, you can see that they have the rules that they say, hey, lenders, if you're going to participate in this program, these are the rules you need to follow. And so they have this whole timing items, and I just haven't seen any money flow through the program yet. So I know there's a lot of applications out there. I know the White House is saying that, and the Treasury Department is saying that there's been so many that have already been awarded. I think the last I saw earlier this week was 178,000 applications have been awarded. I just haven't heard of anyone actually seeing the checks flow through just yet. So I wouldn't be discouraged if you're listening to this and you're following this. I wouldn't be discouraged from submitting it. I think it's critical for folks to submit it. I would just understand that the SBA in a regular year runs through grants and loans and loan guarantees of $30 billion. And they're being asked to run through volume that is, 10x for them. And they didn't set them up ahead of time with additional resources. This is the same pipe that was doing $30 billion of volume before. And you're saying multiply that by 10 and accelerate that rather than do it over a full year, do it in a week or do it in 2 weeks. There is no question that these poor folks over the SBA are probably completely overwhelmed and completely struggling with this avalanche that they're seeing in front of them. It's no excuse, but we just have to recognize to say, hey, if you're on the recipient side of this, if you're on the application side of it, got to be patient. You got to take a deep breath. You got to apply for it because there's really good benefits if we can get this through, but you have to recognize it's going to be choppy for a little while. And the choppiness, one example is, I think the Treasury Department has put out 3 different instructions to the marketplace in a week plus period. So they put out a reg, and then they put out another reg, and then they put out FAQs, frequently asked questions, as further clarification. And I expect, you guys mentioned that you're expecting to see something on Monday where they're changing the rules again on how independent contractors will be treated. I'm going to say I'm expecting ongoing changes for this program. You're just going to constantly see people tinker with it until it works better than it's working right now. I don't want to discourage anyone from trying this program because I think it's going to be a lot of value to folks, but I'm just saying you have to be patient. You have to understand it's a crisis situation and folks are trying to throw things up on the wall and see what sticks and what works.
Okay, so let's say we get through the application, we get through the waiting period, we've got everything done correctly, and we get this money. We get what we qualify for. What's expected of us at that point? What do we do? Are we expected to bring people back if we've laid them off? And if so, this is one question I have. If we're expected to bring them back, but our business is still 50% maybe of what it was a month ago, what am I expected to do with these people? Just float their pay and use this money to pay them? That's fine. What are the expectations?
I would say, look, what's going on here, and I'm going to go again, try to go at the policy level and just say what I think they were trying to accomplish. Federal government put out an unemployment benefit program where it's supplementing state unemployment with an additional $600 a week. Each state has to negotiate an agreement for these funds to flow, but the funds are there and they're going to be there until the end of June. The PPP is intended so that folks won't be going and applying for unemployment. And it's the federal government's way of saying to these companies that are struggling, we've got you. We're going to cover your payroll costs for this 8-week period. We got it. It's on us. If you follow all of these rules, you won't pay a penny for your payroll during this period of time. I think it's a big issue, though, when folks are there's the volume of work isn't there. So you're seeing, for example, in the towing industry, you're seeing dramatically fewer folks driving around and requiring services from companies. On the repossession business, you're seeing company after company after company just make a decision, lenders make a decision that they're not going to be foreclosing during this period of time. So you have whole industries that people are not doing anything. They don't have volume of work. Folks are not driving, cars aren't being repossessed, people aren't, in accidents. There is, for our industries, there is a significant slowdown right now. And the question is, well, what do you do with your employee base? If you furlough them, they'll be eligible to get this unemployment in many states. So they can go through the process of seeking unemployment benefits and getting the additional federal unemployment benefits. Alternatively, if you keep them on and you get the PPP program, you'll be able to have the government pay for that cost of that paychecks over that period of time. And that really is the business decisions that folks have got to make. The benefit of this program, my perspective, the benefit of this program, you have an application that you submit and you say, hey, I have 8 people on staff. And this is the baseline salaries that they're getting. and I keep those 8 people on. I get the proceeds and I keep those 8 people on, and the 8 weeks ends, and I'm hoping the market comes back and the volume's there again, and I'm able to run my trucks and I'm able to get the volume in, and I have trained employees that I've kept on payroll for that period of time without any economic cost to me because the federal government's paid for it. That loan has become a grant. And I think that was the intent. That's the spirit behind it. And I'm hoping that that's the way it actually plays out.
Yeah, the problem with this whole thing is our industry fell on its face effectively overnight.
Yeah.
So a lot of people had to react quickly. It's not a very high margin business, as we discuss all the time. So they couldn't absorb just letting people float or hang on for a week or 2 or 3 when all this stuff got figured out. So a lot of people had to trim their workforce immediately. So they had to let go a lot of people.
Yep.
So that's kind of where my head was on that question: is are we
Sure,
bringing it back? And because I want to take care of our employees. I want everybody to have their job back, and essentially grow after this. But I got to be realistic too.
I mean, my hope is that there's going to be more driving than ever when the stay-at-home restrictions ends, when they figure out a vaccine or a solution for this problem that we have. My hope is that you're going to see a tremendous uptick in volume. I think some of the stuff I was looking at with transportation in China, after they've been able to get through some of the restrictions on travel, you're seeing just a massive upswing in volume again, where people are traveling again. And I'm hoping that we see exactly the same thing in the US. So Brad, having folks available who are professionals, who know what they're doing, I think is critical for our industry to be able to provide the services that we render. So I think this is the way I would say it. Your calculation on how much you can borrow under the PPP, under the Paycheck Protection Act, is based on what you were spending on average in 2019. If you had 15 employees or 10 employees, and because of the recent crisis over the last 3 weeks, 4 weeks, you've reduced that down to 6. You had 10 and you reduced it down to 6. Once you get this funding, if you were to bring those 4 folks back on, you have the ability to have those monies forgiven by the federal government because you're using it appropriately. You're saying, hey, I'm bringing that staff back on. I had 10, I reduced it down to 6 because of the economic conditions. I'm borrowing money from the federal government. I put on my list of how many folks I have on hands right now, I put the 6 down. I don't put the 10 down because I don't have 10 right now. I have 6 on my payroll right now. I base my calculations on having 10 folks because I'm going back to my 2019 numbers, but I have 6. And this is the important part. Your loan is going to be forgiven based on a couple of factors. One, did you use it for the permitted purposes? And the permitted purposes are using it for at least 75% of the money you're borrowing has to be used for payroll costs. But you can also use it for interest costs, you can use it for utilities, you can use it for rents. So you can use that other 25% for that other items. But you based it on what you spent in 2019 on average, and you have 6 employees now that you put in your list. The lender, when they calculate at the end of the day with you on how much is forgiven, how much is converted from a loan to a grant, is going to look at how many employees you currently have. At the end point, at the end of that 8 weeks, that's the calculation period. So they lend you the money, the proceeds are available, you draw down on that loan, and at the end of that 8 weeks, they're saying, well, what did you actually use it for? Do you still have those 6 employees? We said, well, no, I actually have 10 now. I hired some more folks. That's totally fine. But if you drop down from 6 down to 4, so you had a 30% reduction from 6 employees down to 4 employees, they're going to deduct the amount that's forgiven by that 30%.
I have a question because I know this is going to happen. Maybe not in our industry, although it probably will. Let's say you have 10 employees, you got rid of 5, you get this money. You're thinking, hey, I didn't like those 5 employees anyway. Now you hire your 5 brothers that don't actually work for you, and now they're on payroll. surely the banks are going to pick up on that, right? Adding these people that weren't there to begin with, and there's some kind of common last name or something.
You know, I was saying before that I follow a lot of the guidance that we're seeing from all of these different law firms out there that submit or send out bulletins, and my inbox is filled, completely filled with guidance, unsolicited guidance from all of these firms. And one of the recent ones that I was flipping through was talking about the experience from TARP and the experience from 2008, when there was a significant funding by the federal government, and after the fact, how the federal government with the attorney generals and the inspector generals and local U.S. attorneys, how they went after a number of companies. And they were really coming after them aggressively on whether they complied with the rules or not. And so the warnings or the indications or the guidance from this particular bulletin that I was looking at was just saying, be very careful with any of these federal programs. Be very careful, because you're committing a federal crime if you're committing fraud. And these agencies, after the fact, after all this crisis is over, you're going to have folks looking, turning over rocks, looking to figure out who they can go after to show evidence that they were being prudent with the use of federal resources. So I don't disagree, Brad, that there will be people out there who are saying, well, how can I take advantage of this benefit of these programs? I strongly encourage folks to be very cautious, because after the fact, you will have folks with plenty of time on their hands who want to make a name for themselves going after folks who didn't comply, who didn't meet the requirements. You have to be able to evidence in a good faith basis you are following the rules of the program. And if you're pretending that you have folks working for you who aren't working for you, and it's a total facade, you're running a risk of someone coming after you and showing that you committed fraud on a federal program and blocking you from other federal programs down the road, whether it's a disaster relief or any other federal programs, and creating a risk that any loan forgiveness is going to be flipped back into a loan because you weren't following the rules, and potentially penalties that you would otherwise face. So I'm not disagreeing with your observation of human nature, that folks may try to figure out how to be too clever by half. I'm just putting out a notice or a concern to say, we've seen this rodeo before. We've seen what happens after these crises are ended, where you have folks with plenty of time on their hands and an interest in being aggressive and going after folks that they view as being bad actors.
Well, and there's a few in this industry that are opportunists that we tend to call out and hope that they get brought to the carpet at some point. So maybe that'll weed itself out under this program too. But real quick, to wrap up the PPP, let's talk about if there's a portion left at the end of the 8 weeks that's not forgiven, what happens to that? The numbers are now set. They changed a couple of times over the course of the last 2 weeks. So what happens at that point?
Yep. So one of the nice aspects about this, again, remember, this is a loan that didn't require you to have strong credit in the first place to get. It didn't require you to have collateral. It didn't require you to have a guarantee. And it was potentially done on an expedited basis. And it was meant as a loan for a 2-year term, with the first 6 months, no payments due. So everything's deferred. Interest starts accruing immediately, but it's deferred, and you don't have any obligation to pay back for the first 6 months any amounts. So there's a 2-year term of that loan. So if you borrow the money at this interest rate of 1% and you used it for authorized purposes, so that's important. When you're filling out the application, at the very top of the application, you'll see there's a section on the SBA loan application. Brad, I don't know, you were filling some online, so you may have different items that you saw, but on the top of the SBA application, it says, what are you going to use these loans for? And there's a payroll, there's utilities, and then there's a box that says other. You intend to use this loan for other purposes, you need to lay that out. Because if you, at the end of the day, when you're using these funds, and you're using it for something completely different. Like I had a question the other day, if you could use these funds for working capital costs, so paying down a lease obligation that you have, or meeting ongoing fuel cost, or paying for
insurance that's running your business. There's other programs that you can use the proceeds for that. This program wasn't intended to use your proceeds in that way. So be careful that you're borrowing money and you're making a commitment to say, the money I'm pulling down for this program will only be used for this purpose. So I'll give you an example, Brad. You have, you pull down, you calculated based on your 2019 monthly average for your average monthly for your payroll, and you end up getting a loan for $1 million. And over the next 8 weeks, you bring folks back on, but over the next 8 weeks, you spend that money, you spend 800,000 of it. And you're left with $200,000 that's available for you for the next 2 years. Well, you can use those proceeds to continue to pay payroll. You can use those proceeds that you borrow to continue to pay rents or your utilities, because that's what you were authorized to spend on. And so when you're reviewed later on and what were those funds spent for, you're able to evidence it saying, hey, I spent it on XYZ. I spent it on payroll going forward over not 8 weeks, but I spent it going forward over the next 10 weeks or 12 weeks. The loan forgiveness part is only the monies that you spent in the first 8 weeks that you can evidence. The rest of it will be a loan that you can pay over 2 years at a 1% interest rate, which is pretty good. But it's still a loan that you're going to have to pay back at the end of that period of time. Does that answer, Brad?
Yeah, and I think having that relationship with the bank is going to prove vital in that situation to be in constant communication of, hey, can I use this money for this? Yes or no? Can I use it for this? Here's what I'm thinking. Just so you don't get yourself in a position down the road where you get called out and have to prove what you used it for, and you don't have a good explanation. For us, I don't think we'll have a problem. I think we'll burn through that money just with payroll and medical premiums and be fine, but some other people might not. I think that's a pretty good.
Raise one point, I'll take real quick. You have to be careful on the affiliation rules. So any of these loans are for companies that are under 500 employees. So 500 or less employees. That's really the critical item that I forgot to mention at the front. It's a 500 and smaller. It's a small business loan, and they define it as 500 employees. If you're affiliated with a lot of companies where there's common ownership, they're going to combine all of those companies together to calculate the total employees and the size of the business. So if you have multiple corporate entities, like I just know the business well enough to know that some companies run to say, hey, every site, every location that I have, I'm going to run it under a different EIN. I'm going to run it under a different corporate entity to protect the liability and just for my operational process. You will, when you're calculating your total employee base, each of those entities that are under common control will be adding together to have the question of, are you 500 or less employees in terms of your size?
I think it's a great overview of the PPP. We'll be right back, and we'll talk about the economic injury.
Good stuff. Thank you. Explained very well.
Any items you want me to flip back over and highlight again, or you guys are good?
I'm good on PPP.
Yeah, I think that was explained pretty clearly. So I thank you for that. Not a lot of confusion in there at all. So good job.
On the EIDL, there was an article last night that was talking about how just terrible it's executing. Like it is just a disaster itself. I don't know. I don't want to be critical of federal government or the SBA, but the article I was reading last night was just that this is just not working at all. They're just overwhelmed. It's completely overwhelmed with the volume they're getting.
Yeah, the minute that the EIDL came out, I hopped on, did an application just in case. It changed 3 times in 3 days. The application did, the website, and then it went to a strictly upload process. Then it went to a hybrid, quick, generic one-screen application with an upload. So, yeah, I feel bad for them, and I can hear it just in my business banker's voice, how defeated they are and how they weren't ready for this and how much of a pain in the butt it is. So I can't imagine what the SBA is feeling.
Yeah, yeah. And so in an earlier life, I worked at the Treasury Department, U.S. Treasury Department, and I worked with a lot of these folks at the different agencies. I was doing domestic finance policy, putting together emergency programs for distressed parts of the country.
And I'm telling you, these are good people. They are really good people, but they must be just overwhelmed, completely beside themselves on the amount of pressure they're under. You know, it's got to be overwhelming.
All right, we're ready to hop back in. Obviously, that part will be cut out, but we ready to get back into it?
Yeah.
Jeff, you want to lead off?
Good. Yeah. All right, we're back. We're going to continue talking about these SBA programs. We're going to get into the details right now of the economic injury disaster loan and what you're going to need to apply and try to get those funds. So, Peter, go ahead.
Thank you.
Dive right into it, please.
All right. So the EIDL. The nice thing about the EIDL, again, is, and we were talking at the top of this discussion, you don't have to find the lender. You can go directly online. So that's the nice aspect of this program. It's also more flexible in terms of how you can use these funds. It's not based on payroll. It's not based on saying you can only use these proceeds for payroll or a couple of other ancillary costs. So there's a lot more benefit that the EIDL offers. Everyone in the U.S. right now is in a disaster area. So it's not going to block you from applying to this program to have your state declared a disaster. You're going to be able to evidence that. And everyone's been affected in the industry by the COVID virus. So you're going to be able to evidence that you are eligible in terms of the application process itself. The other thing you should know, just as background, is you can apply for both programs. You're not blocked from just applying for the PPP or the EIDL. It's very clear that you can apply for both. And if you have an interest in getting a relatively inexpensive long-term loan that has released or reduced jumps to jump through to be deemed eligible for it, the EIDL may be very appropriate for your business. It allows you to borrow funds up to $2 million, and it allows you to have those funds available for up to 30 years. Now, all of those are dependent on how the SBA is going to work with you on calculating what's the total amount that they deem appropriate for your business needs, and what's the period of time or the length of time that they deem appropriate for that particular extension of credit. But so that's the upper limits. I wouldn't look at that and say, hey, it's automatic that I'm going to get it, but that's the upper limits on it. Offline, we were just chatting briefly about how much this particular program has changed over the last couple of days, and I expect it will continue to change. And anecdotally, we're hearing that people are struggling to get feedback from the SBA, and that the SBA is struggling in terms of being able to address the volume of applications that they're seeing. I encourage everyone, if you are in need of a working capital loan, if you are in need of this type of credit extension, spend the energy to still apply. Even though there has been some struggle that people are talking about and delays, the federal government is really trying to work its way through a volume, a tsunami of applications, just a tremendous volume that's pouring on to a relatively small agency that's trying to work its way through. The commitment of that agency is there. I know it. I've worked with folks at the SBA in the past. I know they're a dedicated group. I know that they're trying to figure out and work through these problems. So I encourage everyone who's interested in these programs to work and spend the time applying for it. The nice part about this particular program that I think was really creative by the folks who put this together on the Hill is that there's a grant piece of it. So if you apply, you should be applying as well for that grant of $10,000. Brad, when you went through the application, was there an item called out for that $10,000 grants? Or was it just automatically part of it in the material you saw?
Not initially. We discussed off the air that I applied for it 3 different times through different companies, and each time was a different process. It was a different website. It was a different process of uploading documents. And the third one I did was the one that I believe is still up right now, where, yeah, the $10,000 piece is included, where you elect if you want to opt in for that program or not.
So I would make sure if you're applying, absolutely opt in. If you're going to the site or the application that Brad's referring to, the last one that's up there, make sure you're applying for that grant. And even if you're denied the loan, the way that the regs are written, you still receive the benefit of those grant dollars. And so it could be a nice, quick benefit that you receive by receiving a grant dollars rather than a loan dollars. The way the two programs work together, if you're applying for both, to the extent that you get the EIDL and you're getting the $10,000 in grant monies, that $10,000 is going to be pulled off of the monies that you're eligible for under the PPP. But at the end of the day, it should not hurt you for applying for both if you're interested in getting both programs. So the EIDL is not going to be based on what your payroll was in 2019. It's not going to be based on a limitation on being able to only spend it for payroll purposes. Again, it's up to $2 million. It has a very flexible basis on what you can use the proceeds for. The interest rate is more expensive. So remember, the PPP, to the extent it wasn't forgiven, has a 1% interest rate. On this particular program, it will be 3.75% interest rates. But I've heard there's discussion on changing that. To my knowledge, it has not been changed, and it will still be at the 3.75% interest rates. There are long-term repayment programs that are being offered by the SBA up to 30 years. It's really going to depend on what the SBA is going to come back and work with you on. And unlike the PPP, which had a 6-month deferral of obligations to pay back, under the EIDL, it's a full year. So there's a full year before your obligations. Interest is starting immediately on borrowing the money, but it will be a full year before the first payments are due back on.
So I've got a quick question. I guess we filled out one of the earlier versions of the application, and the question about the $10,000, it did not mention that it was a grant. It was worded more along the lines, if I remember, could your business benefit from receiving $10,000 immediately, or something like that. It wasn't clear what it was.
Yeah.
I have not been able to figure out how to go back. And we said, no, we didn't need it. We're still in pretty good shape. I'm figuring leave it for the people that really need it right now. So I was trying to take the high road on that one. And I think it kind of bit me because I have not been able to see how to go back and change that.
Yeah. Yeah. And I don't have the answer, Jeff. I'm sorry to say, I don't know how you would go about that, because I do know that folks who have been trying to call the SBA have been on hold for a long time. So if you're trying to reach a human being at the SBA right now, there is a long wait for that process. The other thing I saw on a piece I picked up last night was that there was some discussion in the SBA about reducing how much is available on that grant piece, to reduce it from the 10,000. So I'm not sure how that's going to play out. That could shake out that it's reduced. So again, to recap, the EIDL, like the PPP, is going to have a relaxed standards for lending. It's not going to have the same obligation to show that you aren't eligible to get credit elsewhere. It's not going to have the same standard that your credit score is going to be tracked, and there's going to be a potential you're not going to receive it because you have poor credit before. It is a very flexible loan process. You have the benefit that you can go directly to the SBA, that you don't have to find a lender who's got capacity, who's got you have a relationship with, or just has the time or the capability to assist you as the PPP. You may struggle with that, or may have a difficult time on finding the lender if you don't have an existing relationship. So those are all nice aspects about it. When you apply for it, and hopefully Jeff or Brad, you can confirm this or correct me if I'm wrong on it, but when you apply for this particular program, they don't send you an email back. You don't receive anything back from the SBA. You'll get a screen that says your number is blank. Save it. And my strong advice, take a screenshot. Save that screenshot, because you're not going to get another email. They're not going to send you details on saying, this is your particular code, this is a particular number that you applied for. So if one advice that I have for folks going through this process, make sure you're asking for
the grants, and make sure you're saving the details on your application number when it goes through.
Yep. Do you have any idea what they're using as a formula or a criteria on what you qualify for? So I'm trying to think back. I know you have to enter your gross sales. I think they request your tax transcripts. So I'm assuming they're using some kind of factor based on revenue. But do you have any guidance on that?
I don't have any guidance. I'm sorry. I don't have
Okay.
any guidance.
I'm not sure that they know either. I think everything's still kind of being written. I haven't heard of anybody getting anything from the EIDL yet. So
Yeah.
I can
know
surely.
a couple of people who have gone through the process and are still waiting for anything, and they haven't heard anything back at all.
Yep. And like you mentioned, you can qualify for both. A lot of people are seeing it, even if they don't need it. I've heard comments of it being cheap money, cheaper than other funding and loans they might qualify for elsewhere. So they're going for it. Do you have any insight on how the two can work together? And if you want to get both, how that might play out?
Yeah, so I think about the EIDL is really helping you with your working capital needs. So aside from how do I keep my staff employed, how do I keep the utilities running, how do I keep paying rents arrangement, but if I need to pay down or just I need to run my business, and I'm struggling right now because my cash is otherwise dried up, or I'm not having that cash flow from the volume of business coming in. How do I keep operating and keep ready for when the upswing comes? So when we're through this crisis, when the upswing comes, when volume comes rushing back, how am I still in the best position to continue to run the business and take advantage of that upswing?
Kind of as a side note from that, what if you already have some SBA loans?
Yeah, there's a couple of benefits that we're putting out. So that's a great question, Brad. The SBA right now is willing to work with its borrowers, folks that they've guaranteed, and provide them with some flexible features on their existing loans. I haven't seen a lot of detail that's gone on in that, but it's called out in the CARES Act, and I've seen it on the SBA website that they're willing to provide flexibility for existing borrowers. So there is some reference to it. I think the SBA is overwhelmed right now, and I'd be surprised if it's going to be easy to reach somebody on a basis to talk through those items. But I would, if you are a current SBA borrower, I would pay attention and keep attention to that. They also have an emergency loan program of up to $25,000 that I haven't seen a lot of details other than it's referenced on the SBA website. And so I would also keep paying attention to that. If you're an existing borrower, have an emergency loan facility that they're saying they're making available.
So we do have an existing SBA loan. The original purchase of our company was made with SBA through a private lender. And when this first started going down a couple of weeks ago, I called our rep at the bank, and I said, hey, I'm just trying to be prepared. If we do have to ask for some sort of deferment, what are you going to require? And he says, okay, yeah, please don't do this unless you really need to, that whole spiel. But he sends me over a laundry list of things that's going to be required to ask for a 90-day deferment. And just a few days later, I get a notice through the SBA, hey, as someone with a current SBA loan, we're going to go ahead and make the next 6 payments for you. I immediately called that rep, left a message. Within like a minute, he calls me back. He said, man, it's April 1st. If you haven't made your April 1st payment, don't do it. Stop it, whatever you can do. Well, unfortunately, we sent it off about a week early. So that was already down. And he confirmed, he says, this is automatic. You don't have to fill anything out. If you currently have an SBA loan, the next 6 payments, fees, principal, interest, and fees are all going to be paid by the SBA. He said, you don't owe us anything for 6 months. And so cancel the next 6 payments and we'll get back to you. And that is
Jeff, have you seen that online? Is that something that's on the SBA site? Because I haven't seen that anywhere published.
No, I believe, if I remember correctly, it came to me Oh, you know what? Our university system has this program. It's a department called the Small Business Development Center, SBDC, and they offer free small business consulting through the university. And we've leaned on them in the past for some help with things. And because I was on their email list, I believe that's where it came from.
That's great.
They
If
know.
you wouldn't mind shooting that over to us afterwards, I'd love to be able to post that and let other folks in our network of towing companies be aware of that if they have also similar SBA loans. That'd be great. Thank you.
I'll go dig it out under the 300 emails they sent,
Appreciate
but I'll do my best to find that and get it to you shortly. Sure.
Hey, there's another benefit that I just want to make sure folks are aware of that came out with the CARES Act. That's not through the SBA. And that's the ability to defer the part of your obligations to pay payroll tax to the federal government for 2020. So what they came out, the IRS is essentially allowing folks to have an interest-free loan for through the end of the year, from March 27 through December 31, 2020, for amounts that you would have otherwise obligated to pay to the government for payroll tax on the employer side. You can defer those obligations, hold on to that cash, and you have to pay it back, but you have to pay 50% of that amount back in 2021 and the other 50% of it back in 2022. And it can be meaningful depending on how many employees you have and what your obligations are that you've been paying. So something else to consider. There's going to be a lot of programs out there. I encourage everyone who's running a business and trying to work through these things, pay attention to what these different agencies are trying to do to help companies out on surviving this struggle.
So to touch on that real quick, because I think that's a piece that gets overlooked and people don't really understand. If you use a payroll provider, do you need to communicate with them on if you want to elect into that, if they do their your filings? So you need to contact them and say how you want them to handle that for you?
Yes, and you should reach out to them because they're doing it right now for a lot of companies. So they'll know exactly what you're referring to. So if you would go and get in touch with them, I think some of them require you to request it every single pay period. That is not turned on automatically, that the burden's put on you each pay period to remind them again and again ask them to defer that. So I just want people to be careful about this. You're not getting relief of these obligations. You're getting a loan, essentially. You're getting an interest-free loan to pay those costs back 50% in a year and another 50% in another year. So it's not free money. You're going to have to pay it back, but it's essentially deferring for your cash flow purposes. So you can defer those obligations for some period.
And it's just on the portion that the employer's paying, right?
Employer.
Continue to do your deductions.
And your payroll company will be able to help and work you through them.
All right.
Real quick, to kind of tie up the economic injury loan, can you go over the terms, the final terms they decided on, length of time, interest rate, and all that for that program?
So the interest rate's 3.75 to my knowledge, Brad, and I've been, again, paying attention to stuff. I haven't seen a change in that. I did see some reference that they were talking about changing that interest rate number, but I haven't seen anything definitive. And the term is up to 30 years, but I'm not, again, I think that's the discretion of the agency, of the SBA, in working with the individual borrowers. I don't think it's fixed. I don't think it's locked. It's unlike the PPP, which across the board is to be 2 years. And the Treasury regulations, they say all borrowers under the PPP are to be treated identically. I haven't seen anything like that in the EIDL, where the regulations are saying all borrowers are to have the exact same terms.
So the EIDL it's going to be kind of customized to every individual person on the length of time, how much, and all that.
Correct. It's a capped at up to $2 million, but again, I haven't seen a formula that they've laid out to say it will always be done on the following basis.
Okay. I think that's great information. It dispels a lot of bad information. I think that was the goal here. To kind of wrap up our conversation here, looking ahead, once we get through this, what do you see? What do you anticipate for the future of I guess really the towing industry in our financial situations?
Brad, that's a tough question. So I'm bullish. I think people love their cars. I think Americans love driving. I think that we'll see coming out of this this period of time where people are locked in their houses and locked in their narrow communities. I think we'll see people really getting out, traveling a lot, and I expect to see more vehicles on the road and see more folks driving than ever before. I think we're in for a period of just like anytime we have a body blow like this. We had it in 9/11. We had it in 2008. We've gone through this before. All of us have gone through this and seen this before, and we realize things don't smooth out automatically. Things don't smooth out overnight. But I have a lot of optimism, and I have a lot of belief in our economy and our system, and I have a lot of confidence that we're going to come back stronger because of these struggles that we go through. It's going to take a while, and I think that the programs that we're talking about are really intended to say, how do you keep as much in place as possible? How does the government reach in or reach out and provide some resources that folks who are going through this struggle right now can weather this tsunami, this storm, this unexpected crisis? How do you help companies get through this period of time for that growth that's going to come on the back end?
And we've talked about this before. There's going to be fewer of us after this. Some people are going to see it. They were ready to get out anyway, and this was a good time to bow out. There's going to be people that just financially don't survive, that don't understand the programs, don't want to pursue them, fail to get them, whatever the case is. It's going to swallow up some people. So I think the industry itself is going to be okay, but I think there's going to be few of us that exist afterwards. But I think that's just a harsh reality.
I think there's always, I mean, the system always has that flow, right? Where there's business opportunities, and smart people and entrepreneurs are going to come in and take advantage of opportunities for growth. And as you see the marketplace come back up, and you see people driving again, and vehicles break down at a rate that they're going to break down, and people are going to need assistance on the side of the road, like they've always needed assistance on the side of the road, and that's going to happen. Whether down the road it's an autonomous vehicle, or whether it's people are going to be using vehicles longer than they're using right now. I think average people have, on average, I don't know, I've seen some numbers, I don't know if it's 11 years or so, but vehicle use is going to continue. And we're going to need folks out there who can help people when they're struggling, when their vehicles break down, when they're in trouble. That service is going to continue to be needed no matter what. That's my belief. And so I think that the industry will stay in place. And if there's a disruption because of COVID, because of this crisis, I don't think that that's going to be forever. I think that the industry will continue to have phenomenal opportunities going forward. It may be that there's a disruption for a period of time, Brad. I'm not disagreeing with you on that, but I still believe that the industry will be there. And I'm hopeful that folks who want to stay in the industry can use these types of programs to help them through this storm.
All right. We really appreciate you reaching out to us. I think this has been a great show with good, clear information for everybody. Did you mention earlier that there is additional information on Agero's website?
Yeah, and I apologize, I don't have that at my fingertips, but we've been trying to put out as much information as possible about these types of programs for anyone who's interested, not just our network, or participants in our network. And we'll continue to do that. So we have a website, Agero.com. There's a website for suppliers. I know my colleagues at my marketing team are going to be annoyed at me for not having it. But what we'll do is we'll send the link through to you guys if you want to at some point identify it or make sure folks are aware of it. And what we've been trying to do is we've been trying to collect details from folks who are experiencing it right now and use it as a resource to share with others. The goal that we have is not tell people what they should be doing, but give them information that we've been made aware of
and allow people to have a more informed decision process.
Yeah, and I really, again, encourage people to stick to the legitimate, reputable sites, Agero, SBA, people you can trust, to get it right. So we appreciate the efforts you guys are putting into all that.
Thank you, John. Appreciate that.
Yep, pass us that information, and we'll share on all of our social media and make sure that's available for everybody.
Great. Thank you.
Again, thank you so much for reaching out, helping us cut through some of this clutter and get the good information out there, and we appreciate it.
All right. Thank you, guys. Take care.
Thanks.
All right, we are back, and we're just we know this is a longer than usual show, but we're gonna finish it up with a couple of points that we're each gonna be able to make from a management or owner's point of view on some precautions that we're taking within our own companies.
Yeah, like we talked about earlier, we both hate this subject. We're tired of it. I'm kind of butthurt on what it's done to our business and our industry. Kind of grumpy about it, but it is what it is. It's affected us all. So, we started this podcast to help share information and help people run a business, help people be profitable. So we can't ignore this topic and what's going on. We've done a few Facebook Lives and had a lot of good interaction. And a lot of people said, please keep talking about this. Please keep talking about what you're doing, what you suggest, what these programs are. And so we felt the obligation to do that. That was a lot of information. It was good information. That's the important thing, is it's quality information. You don't need to hop on and read 800 pages of BS on the SBA website or wherever. Just listen to that, and that's what it is. So we appreciate Agero coming on. They reached out to us and wanted to do that for our industry. So we appreciate that. But as far as individual companies, I think it's important to talk about what we're doing. We are not lawyers. We're not the be-all, end-all voice of reason here, but we can talk about what we're doing and what we think is important.
We do have a mic.
Obviously,
Do have a mic.
but we do. So we're qualified, and we both have faces for radio. But to kind of wrap up COVID-19, which I'm calling it now, this episode, what we're doing precautionary wise, we've talked about on Facebook Live, but we'll put it in this episode in case people missed it. As far as the drivers and trucks, obviously we're giving them every piece of PPE we can find: gloves, cleaning supplies, hand sanitizer, wipes, masks, whatever they feel comfortable and want. I feel it's our obligation to help provide that, or at least reimburse them if we can't find it, in large quantities. Defunking the trucks. We stopped taking customers or riders a couple weeks ago, just as a precaution. We've only had one or two issues with very good customers that we've had to work through. But I think everybody understands the climate we're in right now, and we're not getting a lot of pushback on it. We actually created a taxi out of one of our lot vehicles. We threw up plexiglass to separate the front and back seat, completely sealed it off. Obviously we sanitize it after every use, but we've had to use it. We charge for it. For $20 worth of plexiglass. We've actually made money on it, which was not the point. It was just to satisfy the customers, because we were having a hard time finding Ubers, finding Lyfts, finding traditional taxis in some of the areas around here. And we felt the obligation that, these are good customers. These people, to no fault of their own, are now stranded. Some of the over-the-road guys are stranded hundreds of miles from home, maybe. We felt the obligation to help them. That's the best we could come up with, to at least get them to a hotel or to their terminal, wherever they're going. So some people are still taking riders. That's your call. I don't think, I'm not going to tell you should or shouldn't, but if there's any indication that that person is sick, if you pull up and they're coughing and they're sweating like they just ran a marathon, you probably don't want them in your truck. You have to protect your people.
So make sure not everybody watches the news every day. Make sure you guys understand what those warning signs are, what to look for.
You told us not to watch the news.
Oh shit. Yeah. Well, you're better off. You're better off. Make sure that
You don't need the news.
I need. Yeah. I'll watch the news. I'll spread around what I want to get out there. But yeah, I mean, like light duty calls, we're not doing any passengers. You know, we've got some really good heavy accounts where, you know, you're dragging an entire tractor trailer in from, you know, who knows how far away. We notified all those customers that our intention is to not have passengers. We will assist any way we can in getting that person to where they need to go, whether it's a hotel or some other form of transportation that doesn't involve being in the cab of our truck. We made it very clear we're not about to leave anybody on the side of the road. You've
Right.
got to remember we are in the customer service industry, and I was a little disappointed in seeing a couple of comments about, hey, that's not my job. I'm a tow truck driver anyhow. I'm not going to put the extra effort into helping the people find a way home. Like, come on, don't do that. It's part of what we do. We're suddenly changing that policy. So do what you can to help with that transition into this new policy and help people out. I mean, not everybody, I travel a lot. So yeah, I've got Uber. I'm used to using it. I'm sure there's plenty of people that you may have to go tow that don't have Uber on their phone, or they're not comfortable putting it on there. And, you know, maybe someone back at your office with an account, you know, you could use a company Uber account, get them where they need to be, and add it to the bill. It's just don't leave the people. Don't use this as an excuse. I know a lot of people hate having passengers to begin with. Don't just use this as an opportunity to say, oh, no more passengers. I mean, have a plan in place to help these people. They're calling you, they're giving you their business, they're giving you their money, and a lot of people don't have very much of that right now. So let's not make their breakdown their situation any worse. Let's all do what we can to make this run smoothly.
Yeah, I mean, don't cut off your nose, you know, despite your face here. There's going to be life after this, and some of these customers that you leave, you know, stranded on the side of the road, maybe it's a trucking company or whatever. They're probably not coming back to you.
You said something that has just stuck in my head. You said it the other night when we were recording, something along the lines of, hey, employees, pay close attention to how the owners and the management are handling this situation, because the owners and management are paying very close attention to how the employees are handling this. You know, keep an eye on everything. The reason I brought that up is the customers, your accounts that you've got, they're doing the same thing. Who's being a pain in the ass? Who turned their back on us right now? Who's not giving us the service we need? And I'm sure, you know, I contact some of these larger customers from time to time, and it's just a reaching out. You know, it's just, hey, how you guys doing up there? What's going on in your area? You know, and having conversations with this, and a lot of them really. There was something that happened about 6-8 months ago, and this is a very large national trucking company. And I reached out, something was going on in their area, weather-wise. I just shot a quick email. Hey, how's everybody doing up there? You guys okay? And I got a return email. Thank you so much for being concerned. You're the only tower we've heard from who seemed to have any concern for us. You know, so I guarantee things like that, those little things, reaching out to these customers, especially right now, you know, they're going to remember that. The flip side is, if you make their life miserable or make things difficult for them right now, they're going to remember that too. So think ahead.
Yeah, everybody's showing their true colors in this whole thing. Employees, owners, how we service our customers at the company level. Everybody's kind of getting exposed on who they really are right now, which is good and bad. So employees, please see what's going on, see how your owners are handling this. Please do your part. Look out for the company. Jeff said the other day, this is not the time for that lazy damage. This is not the time to spill fuel. This is not the time to hit curbs and have tire issues. This is not the time for anything other than just doing the job the best you can and going home.
Yeah.
Any expense right now is magnified big time. So do your part. Owners, take care of your people. If they show any symptoms, obviously they got to go. It's nothing personal, but they got to go home. I'm not going to get into the legality of what you should do for them. Just take care of them. Be a good human. Do whatever you can to take care of them, whatever that is within your scope of reality. Just take care of them. If they have a family member that's sick, they've got to go. They can't be around your other people. The liability on you to have them, whether they get sick or not, whether the person had the coronavirus or not, doesn't matter. The liability you take on by allowing them to still come to work, to still be within so many feet of other people, to touch your phones or your truck door handles, whatever it is, you can't take that risk. We've said it the whole time here. We'll be fine as long as nobody gets it. We'll be fine as long as nobody gets it. Because I think once somebody gets it, it's going to spread. And then that creates a whole lot of issues on liability, legality, financially, what we have to do to help, sanitation wise, what we have to do, staffing. It all trickles down, and that headache is one we don't need right now. So there is no over precaution right now. Take everything seriously and just take action.
Yeah, I mean, one of the concerns I have is, somebody brings it into the workplace, and let's say you end up with 30% of your people having to be out at that point. In a couple of weeks, what if things start rolling again and these people still aren't feeling good? They're going to be down for a couple of weeks themselves, and here comes some call volume, and you don't have anybody in your trucks. So you really have to be careful with this, and like those people stay home. If there's any question, they need to stay home.
Yeah, and aside from your own people coming in to work and being around your facilities, you cannot let other people come inside your offices. I don't care if you have impounds that they're coming to get released. You have to figure out a way to keep them from coming in. We went to an all online release process for some of the terminals. They can upload everything they need, their title, their driver's license, they can pay, they can do all that online. They show up, they follow us out to their car, they hop in, they leave. There's no coming in the office. There's no coming within 6 feet of anybody. We're taking that out of the equation. The doors are locked. There's no visitors. There's no salespeople coming in. There's no husbands and wives and kids. None of that. Which probably a lot of this stuff is going to stick after all this. A lot of these procedures we implemented are going to become the new standard operating procedure. And I see no reason we have to let people in our doors after all this lets up anyway. We're doing just fine right now. So just take everything serious. Give everybody the tools that you can. Our office is sanitizing every 2 hours, every keyboard, every doorknob, every phone, every key, every desk, everything. There's no overreacting right now.
Yeah, with any luck, in a few weeks we can do a non-COVID show. But I imagine we'll probably end up doing some stuff on the recovery process too. I think a lot of people are going to be looking for ways to recover as quickly as possible, and hopefully we can gather some info on that and have some good ideas. So I think this is going to go on longer than either of us wanted. But
yeah, the cash flow impact on this is going to be huge. Even when everything opens up, people go back to work, people are allowed to travel, whatever. Everybody is preserving cash right now. We're all operating right now on the business we did 30 days ago to some, depending on how everybody's business is structured, but a lot of people live on the receivables. So a lot of us are still living on cash for work we did 30 to 60 days ago. Nobody's taking in a lot of money right now, so they're not paying their bills. Your cash flow is going to go down. You're going to get even tighter than you are right now, even when things open back up. It's not just going to turn back on the faucet and everybody's going to be good to go. So prepare for that. Prepare, to be as fiscally conservative as you can for at least 6 months. I think longer. Cut what you can cut. But be prepared for the cash flow impacts on this to last for a while.
Yeah, I think that about wraps it up for this one, huh? We went extremely long on it, but I think it was important to do that.
Yeah, keep an eye out. We'll do some more pop-up videos, some Facebook Live videos, try to maybe talk about something other than this for a change. If there's anything else going on in the industry, we'll hop online. Those are always fun and get a lot of good interaction. Check for that. Subscribe to the YouTube channel. We're putting up videos. That's just another way to watch and listen. It's a lot of basically the same content, but just a different way to check it out. Just keep an eye on social media. We'll keep sharing everything we can that we feel is relevant and pertinent to the situation right now. And just please reach out with questions, comments, concerns, stuff you think might be good information for us to share. We're all ears.
So we a few weeks ago, we asked for some topic suggestions for some Facebook Live videos, and we got a few good ones in. And to the guys who sent those in, we'll get to them. We've been a little hijacked on the show lately with this stuff going on, but maybe we'll take a couple of those topics, do a Facebook Live soon, and do a completely corona-free Facebook Live, just to do something to help people get their minds off of this for a little bit and have a little bit of fun with it. So it's coming.
Yep.
All right. Thank you.